if you don't have the capital in the first place, as much as MC is going to cringe, there's a lot of business owners who are not leaning on the banking system. Well, hello and welcome to another guest interview here on the Profit with Law podcast. I'm your host, Moshe Amsel, and today I've got somebody special. His name is MC Laubscher. MC Laubscher is the author of Get Wealthy for Sure, and what I'm excited about bringing him on the show is the correlation between what I'm doing with law firm owners and what his premise of his book is, the backstory that I have. So real quick, let me just give you his bio, go a little bit into why I'm excited about this, and we'll bring him on the show. So MC Laubscher is a dynamic entrepreneur, investor, and best-selling author dedicated to empowering business owners through innovative wealth strategies. As the founder of Producers Wealth, he enhances financial well-being across the U.S., while his educational platform, Cashflow Ninja, has influenced over 7 million people globally. Renowned for his acclaimed podcasts and publications, MC shares valuable insights on financial independence and legacy building, earning recognition from Entrepreneur Magazine and membership in elite financial circles like the Forbes Finance Council. Now, his book, Get Wealthy for Sure, is the premise of that book is to deviate from mainstream media's direction and mainstream financial advice direction for business owners, because business owners are different. And what's interesting is that I put my stake in the ground to help business owners with creating generational wealth. And that story stems, you can read the whole story on the bio on my website. So go to profitwithlaw.com / well, just go to profitwithlaw.com and then click the About page. I forget if it's /about or /about us, but anyway, just click the About page. You'll see the whole story. But the real quick Cliff Notes version, my grandfather came from Nazi Germany with his dad, lost the rest of his family in the war. My great-grandfather started a diamond merchant business. My grandfather took over the business from him. He got together with 4 of his cousins, bought an apartment building on the west side of Manhattan. Fast forward many years later, I'm a young parent looking to buy a house. My grandfather gifts me the down payment for the purchase of my first home. He did that for all 36 of his grandchildren. That is the ability that you have as a business owner to create a legacy that lives on well beyond the years that you're here on earth. And your business is one piece of your legacy, but you can also have the financial piece be significant if you do the right things with that wealth journey, if you do the right things with that money. And that's why I'm excited to have MC on the show today. MC, welcome to the Profit with Law podcast.
Thank you so much for having me on. I've been looking forward to this conversation.
Awesome. So tell us a little bit about you and what's your story? What drove you to be helping business owners change their financial journey?
Yeah, so I'm originally from South Africa. So I grew up during a very interesting time in the country's history. So I was a young man when apartheid ended. Nelson Mandela was released. I still remember from prison as a young man. And then we had a new form of government. During all that time, there was a lot of uncertainty. There was a lot of chaos. There was a lot of different stuff going on. So I really, as a young man, experienced what it looks like in society and in the marketplace when there is uncertainty. Nobody knows what tomorrow looks like, where things are going, and you can't really see the future. You know, you can't really dream because you don't know how to dream because you don't know what's going to happen actually tomorrow, right? So at that time, it really, now that I look back, it was a gift, and what I'm doing today when it comes to being a business owner and investor, that was a very, very big gift because I've learned to navigate an environment and also see how the successful people lived through that stage and that time. And we all have heard the story of the madness of crowds and the behaviors of crowds. And I was not surprised in 2020 when people were wrestling each other for toilet paper in the U.S., something that you would thought that you would never see here. Why wasn't I surprised? Because I already saw stuff like that, as a young man. People behave very irrationally. People that can stay calm, behave rational, think, balance things out, look at different perspectives, and map out a strategy you're gonna end up where in your desired place, right? Anyway, after South Africa, at the university, I traveled a little bit. I ended up in the United States. So the backpack, a suitcase, a couple $100, sense of humor, and a sense of adventure. I played sports up until 2007, and I played in a national league in the United States. So I during these travels, I mean, you could get into bad habits, a lot of video games and all that kind of stuff when you're on sports teams, or you could use it usefully. You make use of that time. And I was the guy reading books about business and investing on the team bus or the team plane. And I came across Robert Kiyosaki's Rich Dad Poor Dad, which completely changed the way that I thought about wealth, money, and then how to build wealth. I took action and I started buying real estate. Within 6 months of reading the book, I bought my first property. I put some tenants in there. It was a single family, collected the rent, paid all of the bills, and there was money left over. And it became my strategy at that point to build a real estate business to retire to when I'm done playing sports. So, in my pursuit of a career in athletics, I would just take some of the money and I would build out my real estate business. But of course, that is absolutely when school starts, right? Especially after a first success like that. And, so the first thing was cash flow. Really excited me. I saw what was possible in building out a real estate business. The second piece then that I got again from that book, Rich Dad Poor Dad by Robert Kiyosaki, I read it every year, by the way, so it's been 25 years. I've read it 25 times. Sometimes you just need to read the right books off more over and over instead of trying to read 100 new books, right? And the second time I read it, I realized that all the liabilities that I had at that point was someone else's asset. And I looked at that and I'm like, it's all the bank. The banks really have got this figured out. So what do the banks do? How do they go about business? What does the business model look like of banks? And if you study that, you're like, I need to become my own bank. How do I do that? This is a no-brainer. And it's funny how sometimes in life, when you have that light bulb moment, everything lines up. So as soon as I figured that out, then I ran to the work of Nelson R. Nash that wrote the book, Becoming Your Own Banker, about the infinite banking concept, which I then implemented and executed immediately in my own strategy with my real estate business, and it changed everything. And then I was introduced to a friend in the sports circles that he was also a real estate guy, that they said, hey, he's a real estate guy. MC likes real estate. You guys should talk. And we'd become pretty good friends. And I traveled a lot at that time, so I was really not unemployable. And I was building my real estate business. And he said, you know what? If you're in town, jump in. We'll put you to use in our business. You can learn some stuff, while you were doing that. And in the book, Rich Dad Poor Dad, it says the rich don't work for money. They work to learn. So I'm like, I'm all in, whatever. I'll jump in. Turns out he was one of the largest, his family was one of the largest real estate families on the north side of the city of Chicago. And it was like a fourth generation legacy family where they had this whole family office strategy to build multi-generational wealth of operating business, generating cash. They positioned that in their own family bank that is part of this family office strategy, which then funded all of their real estate deals. And they just did it over and over and over. And it just blew my mind at that stage. I'm like, I figured out I need to become my own bank. I came across Nelson R. Nash's work, and then I bump into him. So I'm one of those folks that have the philosophy, you don't have to be a Rockefeller to do what the Rockefellers do. So I incorporated all this stuff into my own life. And other people started to ask me questions and wanted to do the same. So, fast forward, that's why we started Producers Wealth, where we serve business owners and investors in all 50 states in the United States. And we help them implement and execute infinite banking. And we also do a ton of business planning. We do a lot of family planning. But the main theme is, you've built your business. Let us now help you build your legacy. And let us help you live your legacy. I mean, your story is incredible of your grandfather giving you the down payment for that house. And, it's incredible. We have one of our clients that did the exact same thing. And when he gave the down payment to his granddaughter, in this case, as a gift, he helped them, obviously went on all the house tours with them. I looked at that and I said, that is literally living your legacy. You're not just leaving it, you're living it. You're enjoying all of this while you're still alive. And I mean, think of incredible that is, your grandfather doing that and getting to experience that and seeing that. And it's the same thing there. So with Producers Wealth, like I said, we've been doing that for 10 years. It's actually at the time of recording, we filed our corporate docs 10 years ago today, and started
happy corporation.
There you go. And then I was having all these incredible conversations with our clients because they do all kinds of stuff. And you see everything in business, you see it in investing. And I started to have these amazing conversations. And I, as a passion project, because I love to learn, I said, well, why don't we just click record and started creating a podcast. So 9 years ago, we started to do that with Cashflow Ninja and just started publishing just interesting conversations with business owners and investors. And, that took on a life of its own and, now downloaded in 180 countries millions of times. I never thought it would basically turn into another financial education kind of company. But it's been a lot of fun, and continue to love working with business owners and investors and having incredible conversations with people such as yourself.
Yeah, it's interesting because, like all these things, they kind of take a life of their own. In March of 2019, I decided to launch this podcast, Profit with Law. And then through the interview process that I had, I met some incredible people, which then created our Law Firm Growth Summit, which is the #1 virtual legal conference for law firm owners and key team players. And, we attract somewhere between 2,000 and 3,000 people to that event. And that was all born from the podcast, which, it just took a life of its own. And I love that part of your story too. But you've certainly piqued my curiosity because very familiar with Robert Kiyosaki's work, very familiar with real estate investing. We could totally talk about that stuff, but infinite banking is new to me. I haven't heard of it. I would really like to learn more about that in this conversation. So give me the basic premise of how that works. Because it sounds to me like we start to think about, how difficult things are to get into, and the barrier to entry to being your own bank sounds like you need to have cash to do that. That sounds like something that takes time to amass, and is not something that happens overnight. So I'm curious to know how that works and what the stages are. Before you even start to answer that question, I'll premise it with the work that we're doing with business owners and helping them to unlock massive profitability in their business and to accelerate their growth. We're taking law firm owners that have spent 15 years trying to grow past 500,000 in revenue. And in 12 months, we're taking them to 1.5, 2 million in revenue. And
incredible
with a 30-40% profit margin. So we're getting them unstuck from the first level of success to have the cash being thrown off by the business to then even start to think about what am I going to do with that. But that's kind of the foundation, is like even the basics is difficult for our listeners, right? Like people struggle with that. So this is like 4 steps later. It almost seems like something I can't even think about. So I want to kind of understand it, but also understand how does somebody who's in the throes of trying to grow their business think down the road and think about how to develop this over time?
Yeah, that's the fantastic question. I'll start with a problem that it addresses too for business owners. When you're a business owner and you start your business, you're all in, unless you come from a wealthy family, which that's a head start. But most of us, you're all in. So all of your time, energy, resources, and capital is all in on this business, and it's blood, sweat, tears, late nights, early morning hours. And in the beginning, if you're listening to this and that sounds familiar, you would also know that you don't even know if it's going to work or not. But you're keeping your head down and keep grinding, right? And at that stage, by the way, when it comes to financial advice and any advice whatsoever, you look like a broke person on a financial statement because you're all in. So there's not a lot of people banging down your door to step in and provide great advice for you. Then when the business starts to take off and you're starting to make money, you become profitable. It's now it's flying, right? It has wings, and now it's really generating some revenue. Completely different situation. Now people are coming into your life and trying to provide financial advice, and the advice usually is, well, you've done fantastic in your business or your firm. Let's diversify a little. Let's take a little bit off the table. And what happens then usually with financial advisors is they tell you, okay, that's great. Let's take some money out of the business, and they'll put it in stocks, bonds, and mutual funds. And at that point in time, something interesting happened. If you just take a step back, the money and the capital that you've put back into your business and used to manage and grow your business, you have now lost control, number one. And number two, you're putting it in other people's businesses in some way, shape, or form. I love Apple. I'm on an Apple computer. I love my smartphone, my Apple smartphone. I love the company too. Tim Cook is great, but Tim Cook doesn't need my capital to grow his business. My own business and your own firm needs your capital to keep growing. So that's the first mistake that people make. And that ties that number one, now you've got a shortage of capital. Then a second problem happens. If you're managing a business and your firm, you know this. There's I call it the 4 seasons of cash flow. There's 4 seasons in a business. Summer being the season with the highest revenue months. We all can relate to when that is in our business. Every business has it, regardless of whether you're a product, service, it doesn't matter. So those months, by the way, as you know, not hard to run your business. Not hard from a cash flow management standpoint. But the opposite of that is winter becomes extremely challenging because you still have all the same overheads. You still have all the expenses. You know, you're running payroll, you're paying rent to a building, or if you own it, mortgage, insurance, and so forth. So that becomes really challenging. So in the summer, very, very easy. Then it starts to slow down. You start to go into the fall season of cash flow. There's still some money coming in. It's not the lowest, but it's starting to taper off, which then takes you into the winter, lowest, very challenging at that point. And during the winter, that's when you need access to capital that you can control to manage your business. And you need to invest in other things, new marketing campaigns. Maybe you bring on new employees. You're investing in technology like AI and so forth, because that gets you out of winter into the spring, which then builds momentum to get you back into the summer. It just happens every single year. Now, you need access to capital at all points in time. Now, if you've quote unquote diversified outside of your business and taken the general advice, mainstream financial advice, you're always stuck because you always have to go to the bank. And if you, just saying that, I cringe, but you have to go to the bank for a credit line or get a loan, or there's some sort of access that you would need, number one, just to manage your business, and number two, to grow your business into the next year. And then the other question also becomes, well, you know, there's got to be something else outside of my business too. Yes, there is eventually, and there's a time and a place for diversification, and there's different strategies that we could talk about how to do that as an investor. But the number one return that you will get ever is in your own business. It's almost impossible to do it in something else besides your own business. I mean, I've looked at a lot of businesses and looked at a lot of financial statements. If you're not doing it right, yeah, maybe. But if you're just doing it properly and executing, there's no other place that you can generate the profits and the return than inside of your own business. So where does infinite banking comes in?
Hang on, I'm going to pause right there for a second. We'll get just, I want to insert just a few comments. So one thing is that I want to differentiate between somebody who's in the throes of trying to grow their business. They haven't yet achieved that excess cash flow. Like you're having this conversation about, yeah, put the capital back in the business. But if you don't have the capital in the first place, as much as MC is going to cringe, there's a lot of business owners who are not leaning on the banking system. And therefore, that is keeping you stuck and not allowing you to progress your business far enough to be able to be your own banker, your own capital for your business. And that's what I find, because we have a group coaching program where we work with maxed out solos to get them to 1 to 2 million. And one of the biggest things that we find is that the thing holding you back from hiring an attorney to put into your business, the thing holding you back from investing 15% of your revenue that you're expecting into your marketing, is that you don't have the money to pay that attorney. You don't have the money to invest in that marketing. And what we help our clients do is line up the capital using the banking system to be able to do that. It is the only time that you're going to need to rely on the banking system, because once you have an attorney in place and you can get them to $1 million in revenue plus. And some people are going to be like, what, one attorney, $1 million? Yes, we do that with our Law Firm Growth Elite coaching clients, no matter the practice area. Every single practice area, you can get one attorney to $1 million plus in revenue. And if you want to learn more, by the way, you can book a free strategy session with my team. We'll help you map that out. No pitch on that call. It's a 30-minute call where we'll just map out your strategy. You go to profitwithlaw.com/strategy session, I believe is the link. My team will put it in the show notes. So go to the show notes, not me, not what I'm saying, because I always screw up these links. But anyway, so point number one is, if you don't have cash that's getting sent off by your business, meaning you're cash poor, you're living paycheck to paycheck, you haven't yet stepped into that $1 million plus revenue at 30 to 40% profit margin, and you're literally eating the capital because you're living off your business and you can't grow, that is the right time to lean on the banking system. Everything that MC is sharing is, once you hit that point where you're in stride and you start to have that excess cash flow, it's not going to come evenly every single month. You're not going to have an extra $30,000 every month where you can now live off of that and start to think about, what am I doing with it? You're going to have an extra $150,000 one month, and you're going to be negative $50,000 another month. And that's what he's referring to and saying, hey, listen, you got to start building up that war chest in your business. You got to have that capital. And we're going to talk about infinite banking, and I don't know what he's going to say. I didn't prep for this, but I agree so far with everything that he's shared, that diversification is going to come at some stage later when you're uber successful and the business is running on its own, and we'll let him cover that. The second thing I wanted to talk about, I'm drawing a brain fart right now, so I'll jump in when I remember, but let's talk about infinite banking.
To your point, I appreciate you clarifying that, because in the beginning, like my story, when I went all in and all of my resources, capital, everything, I had to use credit cards too. I had to use lines too. There's no way around that. So I'm glad you clarified that. There's just no way you're going to get to the point where the wings of the business is now flapping and you start to fly, unless you go to other investors, which is a mistake, in my opinion. In some cases, it could make sense to have a private investor. But again, now you've given probably some of the equity up in the business. So yeah, to your point, I appreciate you sharing that, because there's no way around it. And I did the same thing too, until my business generated enough profit and became profitable, so that then the next step becomes, now I'm putting my capital in a place where I can control it. I have access to it at any given point in time, and I can manage the cash flow of my business and grow the business without that. But yeah, to your point, no, there's really no way around it, especially in the beginning. When you hit that revenue mark and you're at $1 million gross revenue, now the next step, the infinite banking, kind of comes in. And what this is, and this is what I learned, by the way, from that very wealthy friend of mine, fourth generation family, that what they did, and he walked me through the whole strategy of this multi-generational wealth system. He said, look, MC, we have operating businesses that kicks off all this cash. Then we take it and we put it in our family bank, our own bank, which is outside. It's separate. It's outside of our business. And what it is, so what infinite banking is a strategy. It's a strategy where you position capital in a vehicle where you can access it at any given point in time to reinvest in your business, and you become the banker to your business. You become the banker to your family members and the children for education, automobiles, homes, and investments, starting a business, and more. You're just reclaiming the banking function. So instead of going, for the business going somewhere else to get capital. You just get it from your own bank because you have now become the bank. So I'll break down the details of the strategy. So what you'd use for infinite banking is you actually use a vehicle of life insurance. And when I say that, everybody will say, oh, here we go. It's like a 4-letter word, right? In most conversations. And I would say, yes, it is, especially in the general public. But life insurance, when you look at the ultra affluent families, family offices, that is an asset class. They see it as an asset class, just like real estate is an asset class that has to do something for them, just like real estate would do something for you, right? Cash flow, appreciation, tax benefits, and so forth. So what does life insurance do? Well, guarantees. The money that's put into life insurance, it's guaranteed. It's guaranteed to grow. It grows tax-free. If you set it up properly with mutual life insurance carriers, you also get access to dividends. Now, it's not guaranteed, but these companies have been around since the mid-1800s and have paid dividends every single year. So they've made good on promises for 170 years consecutively, which is probably what I don't think another company exists out there that have done that or would even get close to that. So it's also there where it ensures the future income that a family member will generate and offers protection with a death benefit that also through proper structuring goes tax-free back into the family. So it is a specific asset class. And the first thing that people think when they hear life insurance, they would say, well, there's a lot of bad stuff about that. Dave Ramsey says it's terrible, and so forth. I agree, by the way, with 99% of what Dave Ramsey says of how life insurance is sold to the general public, because that's retail. When you look at the family offices, there's a completely different way of buying life insurance to use it for the living benefits, not just for the death benefit. Somebody doesn't need to just die or pass away for someone else to benefit from this. So these contracts are very specifically designed, very, very specifically designed. And what I mean is you could use a chassis of a dividend-paying whole life insurance policy with a mutual life insurance carrier, not a stock one listed on the New York Stock Exchange. With a mutual life insurance carrier, you become a shareholder in the insurance company through that. So this policy is structured for maximum cash value. So of the premiums going in, almost 80% go straight towards cash value, which is the savings component of this vehicle. So the money that you put in there never goes down in value. It's not correlated to the markets in any way, shape, or form. It grows every single year through guarantees in a private contract between you and the life insurance carrier. Dividends is on there, and then the death benefit. So how does this infinite banking work? Well, the same way as you can get a HELOC, home equity line of credit, placing the equity of a home as collateral for a line of credit, you could do this exact same thing with life insurance. So when you have $500,000, let's just say in cash value in a life insurance contract, you could get up to 95% of that as a revolving line of credit. So the beauty about this is the money is inside of the policy, cash value growing, guaranteed, tax-free, and you get to establish a line of credit against that. So in that case, let's just say you have $500,000 in the policy, that's growing 6% right now. That's where dividends are. Policy loans are about 5% simple interest. I can borrow $100,000 at 5% from my own bank, my life insurance policies that are put together, and the money that's inside of the policy is not touched in any way, shape, or form. There's uninterrupted compounding growth inside of those policies, tax-free, and I get to use that $100,000 to then go and invest in real estate or loan that money to my business. We have a family bank. I've been doing this for over 2 decades personally, and my family bank is the banker for my business. So when I invested in AI I hired 3 employees this year, we went to the family bank, got a loan from our family bank, and our family bank, by the way, you could structure the loans. So we charge our business 10% in that case. The business paid back, let's just say that $100,000 at 10%, so $10,000 to the family bank. The family bank is leveraging the life insurance contracts, right? So 5% of that went back to the life insurance carrier. Our family office structure, our family bank made the profit of 5%, so let's just say 5,000 in that case. And the money in the policies grew untouched. We didn't draw it down. So what infinite banking is putting it in a vehicle. This is how you this is step one to diversify as a business owner, by the way. You're diversifying capital outside of the business in this vehicle, this bank that you set up, a personal bank, your family bank, because it's outside of your business now, but you're not starving your business of capital. You still have access to it. And it is outside of the business now. It's just a separate business, the banking business. And this entity then gets to loan the money to your business for growth. And again, for all the other things, for investments eventually. We have a client that used his banking system just like this to access the cash value through a policy loan to buy the real estate from which his business operates. He's got 3 tenants in that building other than his business that he now gets rent from. He owns the real estate. One of the anchor tenant is his business. He's got a pretty good anchor tenant. And he used his own banking system. So he's repaying the loans back and forth, back and forth. So this system up and running, it takes time to build up. It doesn't happen overnight. There are strategies that you can accelerate this very, very quickly. But in the end, you have this whole system, which you and your family are the beneficiary of this system that you've created. And again, to your point, you can still use outside financing. And there are still some of our clients that do, especially with bigger real estate project, bigger business project. But you're not in a position of weakness when you go and negotiate for that additional financing to grow and expand, because you've got your own system set up. So you're entering that negotiations or transaction from a position of strength.
This sounds amazing. My wheels are spinning like nonstop, but the first place that I like to go whenever I hear an idea, I love it, I want to dig deeper, is what are the questions that people who are listening to this are asking? And I know that some of the questions are around just, getting started and what kind of commitment. So let's answer those questions first. What is the minimum amount of excess cash flow somebody needs to even consider starting this strategy? Question number one. I'm going to tack 2 questions on you at once. Question number 2, my understanding of life insurance is that once you start a policy, you're now committing to pay into that on a regular basis. Maybe this is structured differently, so I'd love it if you enlighten me. But if we're committing to making contributions on a regular basis, if somebody feels secure right in this minute, what happens if things change? What happens if they're not as secure 6 months from now, and now they've committed to that payment? So those are the first 2 questions around getting started. When is the right time to start, and what kind of commitment are we looking at, and how do we deal with that if we're signing up for something that we don't have the track record yet to know that we're going to keep proving that?
Great questions. So getting started is, if you're looking at like $50,000 a year, so if you have like $200,000 to $300,000 a year of additional capital, this could be something that started that you could use to start with. So that's about $50,000 a year. I started small and started to build up. We have over 12 of these policies now in our family, and I just started where I was at and where I was comfortable, and then I started to grow into it. So that's a very, very good question. Contribution. So how this is structured, and this leads into when you said what are some of the frequently asked questions, is my number one thing that I would share is, how does this go wrong? That's why I always ask people when they share a new idea with me. I'm like, that's great. How does this go wrong? What does this look like when this falls apart? And how it goes wrong is, number one, it's not set up. It was set up with the right company. That's number one. Not all of them are the same. Not all of the mutual life insurance companies are the same. Number two, it is structured incorrectly. So when you actually structure this correctly, the agent that's going to structure this and the professional that's going to structure this, they're going to reduce their commissions by almost 80%, by the way. So you have to be working with the correct person to do this. Because again, I agree with Dave Ramsey. The agents get massive commissions, and there are pigs in that industry. So you have to make sure that it's structured for the benefit of the person. So yeah, you know, depending on age and underwriting and all that stuff, 70 to 80% should go straight towards cash value. So if clients put in $100,000, let's just say, within 30 days, their line should be, you know, between $70,000 and $80,000 right away, right off the bat. Then the third piece is the management of it. It is a strategy. You can do infinite banking with gold, by the way. We have people that do that. They buy gold, they warehouse it in the Cayman Islands, they set up a line of credit against it and do the exact same thing. It's a strategy. So I know the focus is a lot on the vehicle because that's how we've been marketed to, right? We're marketed to in terms of products, but it's a strategy. So management is crucial. So working with someone that has done this, that knows the strategy and is there coaching you along the way, reviewing it, managing it, running in-force illustrations. It's very, very important to work with someone. This is very, very different too than other insurances. I love my property and casualty guy. He sends me a bill and a holiday card. That's it. And that's fine. But this is a different relationship. So if it's structured correctly, to your point, it'll have a minimum and a maximum. So for business, and you need the flexibility as a business owner, because again, you know, the 4 seasons of cash flow. So on $100,000, let's just say you're going to have a minimum of around 20, and you're going to have a max of about 100,000. So between those, there's strategies of how to cover that 20,000 in case, you know, it's slow. It's a slow year. It's a down year. There's strategies that we have, and we've got a lot of them. How to manage that and to make sure that the policy stays in force. You can also structure these policies for 5 years of payments, for 10 years of payments, for 15 years, for 20 years, paid up at a certain age. So you can control the number of years that you pay into this. You know, there's a lot of our clients now, a ton of people are selling investments, like real estate and so forth. A ton of people are selling businesses. So there's large windfalls. You know, we have a client that sold his business for $20 million. He's like, MC, where do I put at least 10 of this so I never, ever lose this and I never, ever have to worry about money ever again? That's a strategy we're instantly, you know, implementing and executing that. He has a line of credit on after putting that 10 million into a strategy. You know, he has access to a credit line of $9.5 million within 30 days. So there are many different strategies. So there's strategies for where you are now, funding it, continue to fund it for whatever number of years you would like to, 5, 10, 15, 20, or a certain age. There are large windfalls that people get that you can position through very, very effective strategies for it to, number one, provide a death benefit. The capital's always just going to continue to grow and grow tax-free. And then also ages. When you're starting young, you have a long runway. You know, in your early 20s, maybe your income from your business or your revenue from your business is not that high, but you have a long runway. In your 50s and 60s, you have a shorter runway, but you have much higher income and much more resources. And we have a ton of clients in that age category too. And then in your 30s and 40s, you know, there's different strategies for that. You're making good income, you've got some resources and so forth. So there's a lot of different strategies, but I would say, you know, covering the main thing is having it set up correctly with the right company, with the right agent that structured this policy for your benefit and can help you manage it. It has a lot of flexibility in there, and then also, you know, it also allows catch-up provisions is the other thing, because some years you just can't fund the max 100, right? So if a well-structured policy, you'll be able to go back and catch it up. One more thing I'm just going to add here that I want to make sure that I add in this too. A lot of us have heard about the Rockefeller strategy. The Rockefeller family office, by the way, is the model of family offices around the world, and it's based on the Rothschilds, their family office structure. Within that, there's a strategy called the waterfall. Now, we talk about generational wealth, right? So what is that? You have your own banking system, and that's fantastic. That's the living benefits, right? And we've covered that. But the Rockefeller strategy, what they call the waterfall, what that is the parents will start, let's just say you start this and you set up this banking system. You max out the death benefits on both parents. And then when they eventually pass away, there is a waterfall effect, a massive windfall to the children. Let's just say there's 10 million on each parent. It falls over. Now there's $20 million that just fell to the children. The life insurance gets maxed out on all of the children then at that stage. So that 20 million, and this is done through trust and more advanced planning, it doesn't go to big houses, boats, and cars. It goes straight into the family bank, the life insurance. And then when the children eventually passes away, that 20 million could turn into 50 or 60 and fall to the grandchildren. And then policies are maxed out on all of the grandchildren. And before you know it, when they pass away, there's 120, 130 million, and I'm just using rough calculations here, but falls to the great-grandchildren. This is something that you could set up that waterfall, and it will never stop, ever, in your family. It will never, ever stop. And the goal isn't just to give money to future generations. It's opportunity. It's a legacy. It's something like you shared in the beginning of our conversation that your grandfather did. You'd be able to do that with this. So I just want to make sure I cover that too.
Yeah, I love that. I love the strategy. I'm thinking, I grew up Jewish Orthodox, and our families with kids of 12, 13 kids in a family. That's the only example where you might not have enough money in that strategy to fully fund each one. If each of the 13 kids has 13 kids, that's a lot of grandkids to try to fund those policies. But no, I love the waterfall strategy and just the vision, just thinking about how that plays out. And I think you kind of answered a question that I had, and I know that this is a strategy and we're getting lost in the how-to of the specific policies, but I think since that's the asset you've chosen to build this on in this conversation, I think, people want to know, okay, how do I do this? Just a couple of how-to questions. So, the family bank, I imagine we're creating some sort of separate entity, an LLC, that is owning the policies. Is it also the beneficiary of the policies? And if yes, how does that affect taxability when the policy is paid out on death?
Yeah, great question. So yes, there's different options for irrevocable trust that people can explore. Great one is the domestic asset protection trust in the U.S. But there's that is your expertise and your listeners' expertise of which trust to use. You can have an LLC that's owned by the trust that is the owner and the beneficiary. And in the trust docs, this obviously you can leave instructions of exactly how this works and how this is set up. Now, from an estate tax perspective, there's a completely different strategy. You can put a life insurance policy in an irrevocable trust outside of your estate, depending on how big your estate is, and you can loan that trust, that irrevocable trust, the money to fund that policy. Why would you loan it? Well, that gets around the gifting exemptions and the gifting
limitations.
Yeah, exactly. So you can, and there's a couple of ways to do that. It's called premium financing. You can either borrow the money from family offices that are very big in that game, or if you have the capital, you can loan it to that trust and then also fund that policy. By the time that you pass away, that irrevocable trust is funded and then takes care of all of the estate taxes. So it's just another strategy using a vehicle. We had a client with a $40 million tax liability, which, strategically putting into something like this $5 or $6 million, which is loaned, by the way, too, knocks out that tax liability. So I look at that, I'm like, that's pretty efficient. Would you pay $5 or $6 million to offset 40? it's a pretty good deal. So there's strategies like that too.
Yeah, 8x return. Who wouldn't, right?
Yep.
It's a no-brainer. All right, really, really interesting. We're at the end of our time, and I think we could probably chat for another hour on this. I imagine that you have more information in the book that you wrote. I imagine that you have more information, and I presume that this is what you do for a living, is you help people with creating this and implementing it. So I like to leave with two things, and here are the two questions for you. Number one, how can people find out more information about this, about you, get in touch with you, whatever the next steps are for continuing this conversation? Number two, what is one parting piece of advice or wisdom that you would like to leave with our listeners?
I appreciate that. So listeners can go to getwealthyforsure.com, getwealthyforsure.com, and what you'll find there is you can request a paperback copy of the book, Get Wealthy for Sure, the #1 financial strategy for business owners to multiply wealth predictably, just pay for shipping and handling, but they can request a copy of the book there. Also, what you'll find is there's a link to all of our presentations and case studies that we share of different types of strategies that we utilize with our firm Producers Wealth. And there's also a link to book a call and explore these options for yourself and your family. This is what we do. This is all that we do, our main focus. We're very passionate about this because we see the difference that it has made in people's lives. It's made it in my own life. If people ask me what's the one thing that's made all the difference, it's this strategy. And this ties into the second question. You know, my mentor, Nelson Nash, he said, MC, you need to be in two businesses at all times in your life, all times. The business that you're in and the banking business. So you have to create a strategy where you focus in your business, the business that you're in, but you're also the banker. So I'll leave that piece of advice as it, because like I said, that's the #1 strategy. And I've been a real estate investor for 25 years, invested in a ton of other companies and so forth. But this is the #1 strategy that has made the massive difference in my life and my family's lives.
Awesome. Really great stuff. I was enthralled in this conversation. I hope you guys were as well, our listeners. MC, thank you very much for spending your time with us and sharing your knowledge. Folks, we are here every single Thursday with another amazing guest interview. Everything that we talked about, the books that MC shared, the URL that he shared, all of that is going to be in the show notes of this podcast episode, which you can find at profitwithlaw.com. If you're listening to this on a podcast player, you can check out our YouTube channel where we not only have podcast episodes, but we have a ton of other video content that we're sharing. If you're watching this on YouTube, you can listen to us when you're on the go. If you go in your podcast player, find the show, Profit with Law. Either way, make sure you hit the subscribe button so you get notified every time we release a new episode. And the last thing is if you are in the stage of your business where you can't think about infinite banking, you can't think about diversification because you're just trying to figure out how to get through tomorrow, then you want to book a strategy call with somebody on my team, profitwithlaw.com/strategy session. It's absolutely free, 30 minutes. What they will do on that call is simple. They will help you clarify what it is that you're trying to achieve. They will help you clarify how to get there. They will help you figure out how to overcome all of the obstacles in the way. And if at the end of the call you want help in doing that, they'll book another call where you could talk about working with us. But that first call is all about you, 30 minutes just focused on helping you create that strategy, because you're not that far away from being able to do what MC shared today. It's literally 12 months. 12 months, we can get you from maxed out solo to $1 million+ in revenue and a 30 to 40% profit margin, which means that you could be having a conversation with MC within 12 months about how to start structuring your family banking, your family, wealth engine, to start changing, in Dave Ramsey's words, changing your family tree, right? You referenced Dave, followed him for a long time, love what he does with people and helping them get out of debt. But just like with MC, where he deviates for business owners on the feelings about whole life and life insurance as a tool, as a mechanism, I also deviate from him and his no debt policy when it comes to building your business. I think that so many people struggle for so long to try to figure out how to get to the next step when literally $100,000 or $150,000 is all you need to jump, leapfrog from $250,000 in revenue to $1.5 million. Now, I don't know who wouldn't do that, right? Like, why wouldn't you spend $100,000 to do that or $150,000 to do that? So have a conversation with my team. Let us explain to you how this works. It's very simple, and we can really help you to leapfrog into thinking more about building your generational wealth rather than figuring out how you're going to live through tomorrow. It's a much better place to be, and you don't need to struggle for much longer. Just need a little bit of dedication and work, and we can get there together. So thanks for listening. We're back in a week. Really enjoyed this conversation, MC. Thank you for being here. We'll see you guys on Thursday. Take care.